I apologize, ladies and gentlemen. Some people couldn't hear me. So I'll start again. So today we're going to be looking at the CPI. The reason we're looking at today's live analysis webinar is to look at the volatility and to be able to determine where there is buy signals materializing, potentially where there's going to be sell signals materialize. And in addition to this, also be looking at where potentially individuals may be looking at a stop loss, maybe looking at a take profit, and so on and so forth. So this is what we're going to be looking at as part of today's webinar. So we want a good understanding of where potentially we may look to place positions, in which direction, and also not just in terms of today's price action, but in terms of the CPI announcement, in terms of the inflation report. How is the price potentially likely to move over the next week, next 2 weeks, and throughout the whole month overall? Now, the CPI announcement is going to take place in 13 minutes. So we still have 13 minutes. But what I want people to understand in that 13 minutes is how they can use certain aspects of fundamental analysis to get a good understanding of where the price is potentially going to move. So how you are able to get information which can help you determine whether we're going to see bullish or bearish price movements. And today we're actually going to start off with the NASDAQ, because the NASDAQ is actually the most traded asset on our platform. So if we're looking at here, ladies and gentlemen, what have I got here? So here we can see all the most influential stocks within the NASDAQ index. Now, of course, within the NASDAQ index, we have 100 stocks. So you can see here 101 stocks, because it includes, of course, the NASDAQ exchange itself. But generally speaking, we consider it to be 100 stocks. And what you will notice is that the stocks, ladies and gentlemen, are ranked. Now, when we say they're ranked, you can see here that Apple is the most influential, Microsoft is the second most influential stock, Nvidia, and so on and so forth. Now, what does this mean? When we're looking at the NASDAQ, it's a weighted index. That basically means that certain stocks are more influential than other stocks. And the reason for this is because they have a different weight. So from the NASDAQ, 8.78%. Some people are telling me they have sound. Some people are telling me they don't have sound. If you refresh, by the looks of it, everybody should have sound, ladies and gentlemen. So if somebody can't hear me, do a quick refresh and you should be able to hear me. So, ladies and gentlemen, basically here you are able to determine which stocks are the most influential, and you're able to see the performance of the stocks so far. Now, you'll notice that most of the stocks are actually red, so they're actually declining in the pre-trading hours. Now, I say pre-trading hours because, of course, the US stock market has not yet opened. So, of course, because the US stock market isn't opened, a lot of these are declining, but it doesn't necessarily mean that we're going to see bullish price movement after the market opens. So the market's going to open in approximately 1 hour. So that's something we, of course, can take into consideration. Now, what different theories are there that we can, of course, use this to determine whether there is a buy signal or if there's a sell signal? And there's different theories that people look at. Now, one theory is the top 10 most influential stocks. Now, to take into consideration the top 10 most influential, you actually look at the top 11, because if you look at Alphabet, which is basically Google, there's two stocks. There's Class A and there's Class B, and so on and so forth. So if we want to look at the top 10, we also include number 11. And what people normally say is if 70% of those top 10 influential companies are increasing in value, doesn't have to be all of them, but 70% are increasing in value, then at that point we start to look at buy signals. Another theory that people look at is all stocks above 1%. So basically from 23 upwards, That's all stocks holding a weight of 1%. So this is something that you also can take into consideration. And again, you're looking at the most influential stocks. And if 70% are increasing in value, you focus on buy signals. 70% are decreasing in value, you focus on sell signals. The only thing I will say though, ladies and gentlemen, is if we look at the most influential stocks, a lot of them are seeing very small declines, 0.35%, 0.44, 0.39. They're very small declines. It's not necessarily something to worry about. Why? Because a lot of people have exited the market in the last few minutes, very simply because we're about to get a major announcement. And also, in addition to this, the market hasn't yet opened. So that's one thing that you can take into consideration, that when we're about to get the CPI announcement, we of course can look at that and use it to back up our trades, back up our signals. Now, what do I mean by that? A lot of people say to me, there's a signal, for example, it could be a crossover that the price is going to increase. I open a SPY trade, but after 5 minutes, it starts to decline. So what we want to do is to see how we can use other aspects of the market in terms of moving away from technical analysis, so something to use side by side with technical analysis to also back up our signals. So this is one thing. You can look at the components, very simple to get access to. If you just type in NASDAQ 100 companies by weight, you'll be able to see the components there. Now, what else can we use, ladies and gentlemen, to help us to get an understanding of how the price is going to move? So we are going to, of course, look at technical analysis, but before doing so, we want to see what other things can help us to determine how the price is going to move. So here we've got FinViz. If you go to FinViz, ladies and gentlemen, if you go to FinViz and then go to futures, let's get rid of these advertisements, and then you go performance, you can see here most of the most influential assets, should we say one of the most important assets worldwide. You can see them here. Now, there's a lot of commodities, but there's also a lot of stocks and a lot of, well, it's actually got most currencies actually. Most currencies anyway, which are part of the major and minor Forex pairs, not exotics, but the majors. So what can we use this for, ladies and gentlemen? If we have individuals that are trading gold, for example, you can see both gold and silver and the performance of the day. Now, these two, of course, are correlated, so that's one thing that you can use this for. Another thing you can use this for is that because gold is inversely correlated with the US dollar, you can also see the US dollar here as well. So this is something that you can use it in terms of gold. Another thing is if you're trading currency pairs, we have to remember not only the NASDAQ and S&P 500 is going to see volatility after today's CPI announcement. We are definitely going to see a lot of volatility in the US dollar. So a lot of people are probably going to say to themselves, if the US dollar is going to increase in value, what's the best currency to speculate the rise of the US dollar? And most investors actually focus, when they're looking at speculating a currency is going to increase, they prefer doing so against the weakest currency. And at the same time, if let's say CPI is lower than expected and the US dollar is going to decline, people want to speculate the decline of the US dollar against a currency which is performing well, not a currency where it's also declining in value. For example, if you're speculating that the US dollar is going to, let's say, decrease in value, you don't want to do so against the worst performing currency, because then you have conflict. You have two currencies which are declining. So the best performing currency of the day is the euro. So you can see the euro here is added 0.26%. That's also a big advantage, ladies and gentlemen, because the euro against the US dollar has the lowest spread. So there's a lot of advantages there, especially for scalpers as well. So there's advantages to speculate in the euro is going to increase against the US dollar. If we want to speculate the US dollar is going to increase against a currency, the worst performing currency, ladies and gentlemen, is actually the Canadian dollar. You can see here's the worst performing. Now, what else can you use this for? This is the last thing I'll say before we go and look at technical analysis and the announcement. here, ladies and gentlemen, you can also see the VIX, which is known as a sentiment indicator for the stock market. So the VIX index, when it's low, it indicates that there is very simply a lower risk appetite. Sorry, apologize. When the VIX is low, it indicates a higher risk appetite, which is positive for the stock market. But when the VIX is high, for example, today is added 0.5%, is negative for the stock market. Now, the only thing I would say, though, again, of course, we had to wait till the announcement of the CPI. For example, if you look at the month's performance, you can see the VIX all the way down here. It's lost more than 10% in a month alone. So even though it's slightly higher today, it has been one of the poor performing indexes. It's very low as well. The only other thing we can take into consideration, of course, is global stocks. Of course, when we speculate in that stocks are going to increase in America, ideally we also want global stocks to be performing well, because that indicates good market sentiment. Again, though, at the moment, let's wait till the announcement has been made. Now, in terms of technical analysis, we already stated as part of today's Telegram, also part of today's market analysis, which you can see on our website, where potentially we're going to get a buy trade. So we have, of course, the high here on the NASDAQ. We also have the low here on the NASDAQ. So this is basically forming the most recent high and low, the main retracement points. And we're basically drawing Fibonacci retracement levels. Now that will put the 65 level here. Now there is the Fibonacci strategy where if you're going to get a breakout of the 65, that indicates a buy. So this is one indication that we can take into consideration. And if we are going to use that, if that is triggered, it's not yet triggered, but if that is triggered and the CPI is lower, which is positive for the NASDAQ, then of course, potentially we can put a stop loss somewhere here based on the support levels. So this here we can see is a support level. This is a support level. So somebody may look to potentially put the stop loss at the support level, just below the support level here. So this is if inflation is going to decline as expected. Now, the stop loss, ladies and gentlemen, bear with me, the stop loss from the entry is there, is 0.20% away. Now, a lot of people ideally want a reward to risk ratio of 2-to-1. So that would actually put their take profit at 40, which is here, ladies and gentlemen. So that's potentially where their take profit is going to be, which is approximately here. So that's something, again, individuals can take into consideration. But like I said before, that at the moment is only if we're going to get CPI read lower, which is currently predicted in the market, ideally if it's lower than expected. Somebody has asked me what time frame am I using. The time frame I'm using on that chart was a 5 minute. So because it's just turned 3:30 here at our head offices. So let's look at the announcement and what has been released. Of course, everybody could have placed a pending order at that level. Right, so inflation has come in higher than expected, ladies and gentlemen. So if we look at the expectations, bear with me, let's actually remove some of these countries because we've got a lot of announcements. Let's remove all of them and let's only put the US dollar here, and that will help us because there's too many, I think, events on the screen. There we go. So if we look at the CPI, excluding food, so the core CPI, the announcement's positive. That's actually positive for the stock market, and like I said before, negative for the US dollar. That came in lower than expected. The CPI, the official CPI, so not excluding food and energy, came in lower than expected as well. So the CPI came in at 3%, so it's dropped from 3.3 to 3%. Also, the core CPI has come in lower than expected. It's declined from 3.4 to 3.3. Previously, we were expecting that to remain unchanged. And you can also see the monthly the monthly figures here as well. So jobless claims also came in lower than expected. So you can see the jobless claims here for the week, and you can also see for the month as well. Sorry, for the year as well. Both have come in lower than expected as well. So that's positive for the NASDAQ, ladies and gentlemen. So let's now go to our charts. So you can see here we've opened on a massive price gap. A massive price gap. So the price gap at the moment, and you can see here how positive that news is just by the sheer size of that gap. So that's opened on a gap of 0.40%. So that is a massive gap. Definitely we're going to be getting a lot of buy signals now, ladies and gentlemen. We probably crossed onto a higher high as well. So if we slightly go onto a higher time frame, there we go. Let's remove the Fibonacci just for the moment. So you can see the all-time high was here, and it is higher. And you can see even as we're speaking, and I'm saying it's positive, and we've already got the buy signal which is triggered. You can see the price is still increasing. So that is definitely, ladies and gentlemen, the signal from earlier on today being triggered. It's been triggered already. Where did we have our buy, ladies and gentlemen? We had the Fibonacci here. So the buy was all the way down to here at the 65, and we're currently 0.44% above. So the take profit is already being hit, ladies and gentlemen, based on the signal, not that I've given today, but based on the signal that we had earlier on this morning. So if you go, for example, to our website and you go to analysis, you are able to see every single day market analysis. Every single day we have market analysis. So this was the analysis from today. If you go down, we can see USA 100, the NASDAQ, and you can see exactly where we have stated buy signals. And if we look at the price here, 20,697. And if you look at where the price is now, it is much, much higher. So this is the advantages of also looking at the market analysis that we have every single day. So that's something, of course, we're going to take into consideration. Let's start off with a higher time frame. If we look at this time frame, which is a medium-term time frame, this is a 2-hour chart. We have a trend line. So here we have the 75-bar exponential moving average here. So let me open up the settings for you. So we have a period of 75, and it's a method of exponential. And then we also have a sentiment line here. This is the NASDAQ, by the way. So here we have the sentiment line. It's a 100-bar simple moving average. If we look at the RSI is overbought. It's understandable that it's overbought because we look at a lot of upward volatility. But yet again, the data is also supporting upward price movements. Why? Because the cost of debt is likely to decline. We're likely to get an interest rate cut in September, which means higher consumer demand. And also, in addition to this, it means bonds are less attractive. It also means the US dollar is less attractive. So people are more interested in mitigating away from those assets and moving towards, for example, the NASDAQ, S&P 500, and so on and so forth. Now, if we look at this setup, the setup is indicating that buyers are controlling the market. We're above the trend line, above the sentiment line. The RSI is very high. The only thing which is of caution is that the price is overbought. So some people may want to wait until opening a further buy, because the buy signal we spoke about this morning, and which also took place a few minutes ago, the take profit has already been hit. So we had a reward to risk ratio of 2-1. The take profit's already been hit. So of course people want to be opening another trade and continue trading. So how, because we've got here in the short to medium term signals for the USA 100 to increase, but how do we get a further signal? Because our take profit, because there's been so much volatility, has already been hit. Now what we can do is switch over to a 1 minute time frame just for the moment, and you can again draw from the Fibonacci levels. We can draw from the high to the low here. We can see the Fibonacci retracement levels open up again. And then that 65 point again is the key level that when we look at the Fibonacci retracement strategy is again and again continuously used. So what is that signal? Basically, if the price again maintains momentum and starts to increase in value again, doesn't have to be now, maybe in the next hour or 2 hours. We've got many hours before the US session ends. The US session, technically speaking, hasn't even opened. But if it starts to gain momentum like it is now, as soon as it crosses above this level here, that's the area where we have an active buy signal. Now, if somebody is slightly more cautious, then of course they can put, rather than trade at the 65 level, they can trade at the 88.6. The only thing I would say is if you want to trade at the breakout, that's also an option. But the issue with trading the breakout is, if we're looking at the 65.00, that's 0.07 percent away. It's not very far, it's just enough momentum for us to say that's enough momentum for us to start indicating upward price movement. But if we look at the breakout 0.14%. It's double that. So we've missed out a lot of price movement, especially if we're looking at ultra short-term traders. 0.07% is a lot of price movement, which of course they're going to want to take into consideration. So this is something that individuals can use to open a further trade. Like I said, because our first trade has already hit our take profit. So this is in regards to the NASDAQ. Now, if we're looking at the S&P 500, it's probably going to be more or less the same. So I won't look at the S&P 500. I will, though, look at the Dow Jones. Of course, the news is positive for the Dow Jones. It's less positive, but still positive. What do I mean by less positive? The Dow Jones is largely exposed to defensive stocks. A good example of defensive stocks is, for example, Procter & Gamble, very well-known defensive stock. Also, Walmart is a very well-known defensive stock as well. Now, though, if we're looking at the NASDAQ is largely growth stocks. So today, of course, the announcement has triggered a higher risk appetite. So people are more interested in growth stocks. Now, in terms of the Dow Jones, there of course is the option for the Dow Jones as well. The only difference is if we compare the two, there's more likely to be characteristics of mean reversion, stronger retracements compared to, for example, if we're looking at the NASDAQ. But nonetheless, we're still largely above our sentiment lines. We're still above our trend line. We're still between 50 and 75, which indicates buyers are controlling the market. And we're not yet overbought. So if people were cautious about the overbought on the NASDAQ, maybe they can take into consideration the Dow Jones. Now, if we look at the Dow Jones again, this time though, we can see we've had some slightly stronger upward price movement when we compared it with the NASDAQ. So we did get a buy signal triggered, but it's declined back below only by a couple of percent. So keep in mind, this is only a 1 minute time frame. So it's 0.5% away. So nothing major just yet. But if we want to see a further increase again, then of course we have to see the price increase again to the 65 point. And then that's where we're going to get an active sell. An active buy trade. So that's the only difference between the NASDAQ and the S&P 500. Yes, the NASDAQ and the Dow Jones. The Dow Jones is likely to see more characteristics of mean reversion, basically larger retracements, larger corrections. If we've got individuals more interested in trading the trend, a trend-based scenario, then of course there's more benefits to looking at the NASDAQ. The NASDAQ's also got a lower spread as well. Now, the announcement, like we mentioned, very simply stated to us that the US dollar potentially can decline. I did mention to everybody the best performing currency of the day was the euro against the US dollar. And if we look at the euro against the US dollar in the current candlestick, ladies and gentlemen, it increased already by 0.42%, slightly retraced to 0.34% now. Again, we're looking at a very similar scenario that the indication of both technical analysis and fundamental analysis is that the upward trend is going to continue. We're trading above our trend line. We're trading above our sentiment line as well. The only thing is that the price is overbought. So that's something that we can take into consideration. But what we can do, like I said previously, is we can very simply switch to a 5 minute to see that momentum is being gained again before buying. Now, most likely we're currently in a buy signal. Actually, definitely still in a buy signal, because yes, it retraced, but we got the 65 point here. So this is where the signal would have been that you would have bought. So at this level here, this is a new strategy. This is something that we've seen over the last 15 minutes. We've looked at the NASDAQ like this. We looked at the Dow Jones as well. Since we've had that, ladies and gentlemen, it's already increased by 0.7% and still increasing as well. Now, in terms of individuals thinking about, what target can I look at? By the way, as we're speaking, it's just flying. It's going higher and higher. So, in regards to people that want to look at potentially where they can look at the target, there's different things that you can take into consideration. Now, a lot of people tend to fall into the bad habit of opening a very large trade straight away, and there's, should we say, risks to that, because there's a large trade at one price, trade in one direction, and one asset. Whereas a lot of people, they look at what is known as scaling in and scaling out. So, for example, people can use scaling in and scaling out with the 0.10% scenario, which is very well known. So somebody could have said, if it breaks out above here, I'll start to speculate upward price movement. Now, instead of opening, should we say, one lot here, they would open 0.25 here, lots, and then 10% above. So here, they would open another 0.25, and then 0.10% above here, they would open another 0.25, and then another 0.25, which is approximately somewhere here. So what they're doing, this is known as scaling in. Now, you've got an option. You can either just scale in and exit them all at the same price, or you can scale in and scale out as well, which basically looks at closing some of those trades at one price and some of them at a different price. So this has got advantages as well, because if your timing isn't great, for example, then it's not an issue, because you're spreading the risk against 4 different timings, 4 different prices. Yes, same direction, we're still trading the trend, but for example, if, let's say, we opened the buy here and then it retraced, it's not an issue, because if you only opened one lot here and then it starts to retrace and it's declined all the way down to here, you have one trade and it's in a minus. Whereas, yes, I opened the trade here and now it's in a profit, but before it moved into a profit, it wasn't an issue for me that it declined. Why? Because this trade is in a profit and this trade is in a profit. So I'm actually either at a break even or still in a profit, regardless of these 2 trades being in a loss. So you can see here what the benefits are of scaling in. So instead of opening one large trade, split the trade up into 4. Okay. So that's something you can take into consideration. At the moment, the price is increasing significantly. All of these entry points are in a profit. In terms of your exit now, ladies and gentlemen, you have an option of exiting all of these trades at one price, or you've also got an option to close them at a higher price. Now, you can use the candlestick from the current day, like so, and you can even look at a target here of 0.30 of 138, or the target of 161, or you can look at scaling in and scaling out on 3 levels. So, for example, here you can exit the first trade. here the second trade, and here the last two trades. That's just a very good example. Somebody's asked me a question about gold. So let's actually go to gold, and we can always relook at the US dollar in a moment. Of course, gold, there's a lot of benefits for gold. The only thing I would say to definitely be cautious about is that we have to remember gold is used as a hedge against inflation. Now, gold, yes, there's a lot of demand at the moment because because the US dollar is declining, and gold is inversely correlated because it's dominated in dollars. But we also should take into consideration that, we've gone to a higher high. If we look at the size of this impulse wave, it's a very similar size. For example, this is 2.5%. If we look at this impulse wave here, it's it's a 1.82%, 1.96%, and we've got here at 2%. So at the moment, it's much, much higher. So on average, we're looking at about 1.90%, the size of an impulse wave. And here we're looking at 2.55. Yes, of course, it's also because of inflation. But the price now is very high. It's overbought. It's seen a larger impulse wave than what we normally characteristically see. And also keep in mind, yes, the gold is positively affected by this because there is benefits to the decline in the US dollar, the decline in bond yields, for example. This is all benefiting gold. But because inflation is lower, that can have a negative, not a negative effect, but apply some pressure on gold. Very simply because gold is known as a hedge against inflation. So that's something that we, of course, could take into consideration. So, yes, the signal is that the price is going to increase. We can see that very clearly here. The only signal that we need to be cautious about is that it's overbought. It's currently at 76, so that is overbought. We want it to be below 75, but we also can take into consideration a retracement. So if we go to gold, we also can take into consideration retracement. We haven't had actually any retracement at all. If we actually, before we go to look at retracement, let's look at a 4-hour time frame and look at gold in terms of its support and resistance points. So we're very, very close now, getting very close to support and resistance points, ladies and gentlemen. We're not quite there, so potentially there is some upward price movement that we may see, for example, up to this level and then see a slight decline. When I say decline, I'm not necessarily saying a completely new trend, but while let's say, for example, the stock market may continue to increase, the NASDAQ may slightly be pressured. Now, in regards to the stock market, also keep in mind earnings season is starting tomorrow. Tomorrow, it will mainly affect, between tomorrow all the way up to the 16th, it will mainly affect the S&P 500 and the Dow Jones. But from there onwards, it will mainly affect the NASDAQ. That will have the most volatility because from the 17th onwards, that's when earnings season for the technology sector will start to gain momentum. So at the moment, we need to be cautious of a retracement because it also hasn't retraced yet at all. If we go to the 1 minute, guys, we can see it hasn't retraced at all. So we need to be cautious of a retracement. But we've also got some room for upward price movement till we get to the resistance level. Now, what can people look at in order to get a signal of where there may be a retracement? Now, because there hasn't been a retracement yet, we very simply need to determine how much momentum is required in order for that to be enough momentum for the price to decline and form a retracement. Now, retracement technically can be all the way down to here. Now, we're not going to trade it against the trend at 0.95%. That's a massive trade. Very, that's a massive trade. Very clearly below, higher than what individuals would normally trade retracements. Why? because we're trading against the trend. When we look to trade against the trend, so for example, if we go back to 15-minute, half an hour, and 1 hour, you can see it's an upward trend. So when we're trading against the trend, we don't want to trade anything more than a retracement. 0.95% is a massive decline, especially for CFD traders where we're looking at ultra short term. And I'm speaking about decline before it even takes place, and you can see it is declining. Not necessarily going to see a complete new trend, but a decline. So, for example, if we get a decline, if we actually look at this as an impulse wave, like so, if you get a decline to the 0.65, people may, if they want to be slightly more cautious, place it slightly lower, like here, for example. So it's more like 0.70 because it's against the trend. If it declines to here and breaks below that, then you can use that as a signal to speculate the decline. But again, I wouldn't necessarily continue to speculate all the way down to here unless you're willing to take on that risk. Because that's very far away, especially for short-term trading, especially for trying to trade the retracement. Instead of that, you can look, for example, at the 0.60 or 0.38. Now, as it does decline to here, for example, if I bring this further back, does it allow me? No, it doesn't allow me. So if it does decline, for example, to here, then very simply, you can draw from here, the Fibonacci level, all the way to your take profit here. It will draw you another 65. So you can see the 65 here. So you've taken advantage of the decline, but as it starts to gain again and increase higher, if it increases above here at the 65, then you've also got a buy signal. So you're able to take advantage of the decline and also take advantage of the buy signal. Somebody says if we can look at the NASDAQ, so let's go back to the NASDAQ. The NASDAQ's declined, ladies and gentlemen. So we definitely have to wait until the stock market opens. Most likely being hit with pending orders, being hit with sell trades, take profit trades. So probably hitting everybody's take profit. Nonetheless, though, the indication is still very clearly that the price is going to increase and that the news is positive for the stock market. Now, why do I say positive for the stock market? Inflation's lower, the core inflation is lower, employment claims was lower as well, so that's positive because over the past month, employment claims has been very high consecutively, actually for 4 weeks consecutively. We saw it higher. So now we've gone back to where the price was previously. Some people may say that's an issue. To be honest, we hit our take profit. And I wouldn't say that's an issue very clearly because it just gives us an advantage to purchase at a lower price. So that's something, of course, we can take into consideration. Now, what can we use now that we've seen the decline? What we can do, ladies and gentlemen, is look at the crossover. So the latest crossover is a bearish crossover. So this is the crossover that we can see at the moment. We can wait on the 1 minute time frame until we get a bullish crossover. If we get a bullish crossover, there is where we can start to speculate outward price movement. So if this starts to gain momentum, probably somewhere around here, we will get a bullish crossover. But what we also need to focus on, like I said previously, is we look at the NASDAQ in terms of its components. So here, when the stock market opens, stock market hasn't yet opened, but when it opens, we can look at this. Also, we can look at US bond yields. And bond yields are lower. Look at this. Bond yields are so low. Bond yields are low. It's known to positively affect the stock market. So yes, institutions are driving the price down, but are they driving it down just very simply to purchase at the lower price? That's something for us to take into consideration. If it starts to gain here, especially at 4:30, so when the US session starts to open, if it starts to gain there, that's where we potentially can see another buy signal speculating upward price movement. So that's something we, of course, can take into consideration. Very interesting that we're seeing that decline as well. Let's also go to the Dow Jones. Dow Jones, we can see exact same price movement, so very, very similar. We did say this for the Dow Jones. We didn't say it though for the NASDAQ, so let's wait and see. Now, the other thing people also can take into consideration, because some people are mentioning the US dollar, got somebody says here USD JPY, somebody else says pound against JPY. We'll look at both. JPY potentially can gain momentum from this because the US dollar is uh, less interest, should we say, less attractive. But at the same time, we also need to note that the euro and pound are one of the better performing currencies of the day. The only thing I also wanted to mention to you is the Chicago Exchange has what is known as a Fed Watch tool. What does a Fed Watch tool mean? It basically is showing you on the Chicago Exchange what they believe the possibility is of an interest rate cut. So here, for example, if we look at July, this was actually only at 7%. Now it's at almost 9%. So chances of a cut has already increased, but of course it's not going to happen in July. But if we look at September, look at the possibility of a cut. The possibility of a cut, ladies and gentlemen, is almost 86%. So very high. Now this, if we're looking at the very beginning of today's session, today in terms of the European session, that was actually at 77. Now we're looking at 7 plus 78, so we're looking at 85, just over 85. So we've gone from 77 to 85%. Now, the higher that goes, the higher the possibility of a cut, the more positive it is for the stock market. So that's something for us to note. Now, people have mentioned two currencies. They've mentioned the pound against Japanese yen and the US dollar against Japanese yen. I always say to individuals, when you're looking at currencies, look at each currency individually. Now, what do I mean by that? Look at this. I mentioned this, by the way, a couple of minutes ago, that if the US dollar declines, it may be massively beneficial for the Japanese yen. Japanese yen now is trading 1.78% higher, even before looking at the MT5, even before looking at this website. So, of course, the issue, I would say, with the pound against Japanese yen is that both of them are increasing in value. So that's a slight issue. Doesn't mean we can't trade it, but there's conflict there. Whereas if we look at the US dollar is down and Japanese yen's up. So there's no conflict there. So there's a slight more benefit to looking at the US dollar against Japanese yen. Now, if we go to the 2-hour time frame, just as a start, we can see we've got a signal. It dropped below our the sentiment line and trend line at this point. So here is where we got our sell signal. Since then, the price declined 1.72%. So very, very, very big difference there. The price is oversold. That's understandable, to be honest with you, because that is a very large, very, very large trade. Very, very large downward impulse wave. We're far below the previous low as well. So it's definitely understandable that it's oversold. So yes, potentially there may be a retracement. There's no sign of a retracement just yet, but we can take it into consideration. So how can we do that? Even though the price is declining, we can take into consideration that it may retrace. So for example, we can look at the breakout of this level. If it breaks above here, we can look at a short trade. So for example, our stop loss, we can there's different things people can take into consideration. We can look at, if it breaks above there, we'll look at a retracement, and our stop loss is just below the most recent low, but that's a lot of volatility, so I'm not too sure people want to take that into consideration. But what we can definitely do is look at that as an indication that if it increases above there, we look at a retracement. A retracement can increase all the way out to our previous resistant support level being flipped onto a resistant level. Another option is we can draw Fibonacci levels between these 2 points and slightly lower our target to 65 here. So that's another option as well. Otherwise, very clearly, indications of downward price movement. Where can we potentially look at our take profits in terms of downward price movement? If we go to the daily time frame, we can aim for our center trend line, which is the 75 bar exponential moving average. That's one option. Or we can trade slightly higher here, which is basically the resistance being flipped onto the support. Doesn't mean we would see a change of trend there. It's just that's where you're putting your first take profit. Doesn't mean that's going to be your last take profit, but it's just your first take profit. So, ladies and gentlemen, that's a lot of volatility for the day. A lot of volatility. We've looked at trends. The only thing I would say in terms of the NASDAQ, because we've got a lot of upward volatility, but then it's declined thereafter. Let's go to actually a 5 minute time frame to look at that. The only thing I would say in terms of that is let's wait till the US session opens, because you can see it's gone back to the previous price, but it's just stuck there for approximately 10 minutes. So let's wait till the US session opens, because there we may get a further signal that the price is going to increase. So that's something, of course, for us to take into consideration. We can look at a 1 minute time frame, and if we get upward crossovers, so if the red moves above the green here, that's where we have enough momentum to speculate upward price movements. So that's the end of today's session. Some people have asked, can you give us those websites? Yes, of course. To be honest, I'll show it to you on Google, because I think that's the easiest way. If you go to Google and just type in FinViz, like that, this is the first website. So you just click on it, go to futures, and then go to performance, and it shows you the performance of all indices, currencies, and commodities here. So that's the first website that we used. The other website we used, just type in NASDAQ components, and you can see the components here. So that's the first website that you use. There we go. Now this is our calendar. Our calendar is amazing because it doesn't only give you the inflation for the month, which most calendars do, but it also gives it to you for the year, and also gives the core inflation for the year, which most calendars do not do. So that's also something you can use. If we've got any questions, feel free to ask now, and I'll be more than happy to answer all questions. I can't see any questions, so let's end today's session. So trade responsibly, trade safely. Hopefully you found today's live stream educational. Of course, keep in mind that here at HF Markets, we offer a zero account, which basically has very, very low spreads. We have a zero swap account as well, where you're not charged swap fees overnight, especially on currencies and some commodities. Massively beneficial. And also, of course, we have copy trading, where you can copy other traders regardless of their account size. You may have an account of $25, they may have an account size of over $500,000, for example. Regardless of their account size and their success, you can still copy their trades. Somebody says if we can look at gold one last time. Of course we can. So let's go to gold on a 2 hour first. So if we look at gold, so gold is still very high. It has retraced like we did say. So when we said the retracement, the price was up here, and it's retraced down here. To be honest, I probably hit most people's take profits anyway. I mean, that's a decline of 0.26%. So it has slightly retraced. Of course, this is great as well because it gives us a breakout level here, and it also gives us a breakout level here. So you have signals regardless of where the price is going to move. Of course, the bias though is that the price potentially can move upwards because inflation is significantly lower and the US dollar is significantly lower. But at the same time, like we saw with gold, like we saw with the NASDAQ, Of course, as the price increases, people start to cash in their profits. Somebody says, I didn't get the first website. Please show it to us. Which is the first website? So we looked at also the SME Fed Watch tool, this website here. So if you type in SME Fed Watch, this is for interest rates, gives you the Chicago Exchange's belief on the possibility of interest rate changes. So you can see all the dates of the Federal Reserve meetings here. We've got 4 more meetings by the end of the year. What website are you referring to? We looked at this website, we looked at FinViz, and we also looked at this website as well, which is Slick Charts. Okay, so people are saying these are the websites that they wanted. All right, so let's end the session. Hopefully, you found it educational. Of course, we have many webinars throughout the week. Approximately, we have almost 18 webinars every single week in many languages. So feel free to join our website. You can join for free, and you can join webinars every single week. Each time there's a different topic. And of course, these are all for educational purposes, and you can get access to them for free. So that's the end of today's session. Enjoy the rest of your day. Enjoy the rest of your week. And if you require any assistance, feel free, of course, to email me at any time, and I'll be more than happy to assist. In the meantime, though, goodbye.